Good morning, and here are your top 5 stocks to watch out for in today's trading session. Let's start off with the earnings that are expected to come out today. You've got Coal India, Shree Cement's, Power Grid as well as Aurobindo Pharma that are set to come out with their numbers. And here's a quick look as to what you should be watching out for when it comes to some of these earnings. Well, let's begin with Power Grid. We're expecting the revenues up 8%, margins are seen at 87.2% versus 87%, profits are seen growing by 13%. The rebate on discounts may impact profitability. Shree Cement revenues are seen growing 3.5% on year, PAT is seen up 23%. Expect volumes to grow nearly 14% and higher petcoke prices could impact margins. And Bharat Forge, the profits are seen down 61% with revenues down 25% at 940 crores. Led by a decline in the CV and the non-auto and domestic non-auto that will partly be offset by some growth in the domestic CV segment. Let's get a move on then and focus in on some more earnings. ABB Power came out with their numbers, very encouraging. On a sequential basis, their margins have grown to 7.3% versus 0.6%. You had their Q3 CY20 revenues come in at 932 crore rupees. This is up 57% if we're looking comparable on a QOQ basis. Profits were down 56% though at 4.8 crores versus 10.9 crores, but there was an exceptional item of about 62.6 crores reported this quarter. Moving on then to Tata Power, the consolidated revenues were higher by nearly 15% on a year-on-year basis to 8,413 crore rupees. Their profits came in at 371 crores, that was higher by nearly 10% on a year-on-year basis, with the reported EBITDA at 2,276 crores, up 7% on year. Bata India, well, clearly no one's going out and buying shoes in this pandemic, and that really impacted their earnings on a year-on-year basis. They delivered a loss of 44.3 crores versus a profit of 71.3 crores last year. Disappointing with their margin picture, as you can imagine. 4.9% is what they delivered versus 25.4%, and revenues as well shrunk or halved, you could say, to 376 crore rupees versus 722 crores, with an EBITDA at a meager 18 crores versus 185 crores. And NMDC came out with their numbers too, with a revenue at 2,229 crore rupees. You had the PAT coming in at 772 crores versus 701 crores. Margins came in lower to 45.9% versus 47.2%. The board has also approved a buyback of shares of the sizes of 1378 crore at a floor price of 105 rupees a share. JP Morgan has an overweight rating, which they're maintaining with a target at 126, saying strong earnings will improve into the second half and that the domestic iron ore market remains tight.